Okay, given the critical time period we're in currently and how critical I expected the last few days to be in the context of that, I decided to hold off on doing my next video until after the recent Fed meeting was over with and I could see how the market would react to that. Okay, the Fed meeting was last week, the most recent Fed meeting. They happen every 6 weeks. And I think as of today, this is Monday, as of today's trading, what happened by the end of the day, really before the end of the day already, but certainly by the end of the day, it's pretty clear where we're at, and so it's time to do a video to talk about it, to describe the situation, and give a hint of maybe where things are headed in the future. Okay? The bottom line is that the stock markets were already in a downtrend before we went into the Fed meeting. Okay? Now it's well known in the meantime that there's an inflation problem. The Fed was talking about increasing interest rates by even half a point at the Fed meeting, and they did that. Okay? Ever since the downturn of 2008, the Fed is also holding a news conference after every Fed meeting. They didn't used to do that. And the Fed chairman, who runs the news conference, spent the news conference explaining the decision making and justifying it. He did indicate that they're putting an emphasis on inflation in the meantime. That's not exactly a surprise. Okay. He also stated that he thinks he can pull off a soft landing. He said a few things at the detail level. These news conferences are not short. They go on for a while. Said quite a lot at it. And one of the things to keep in mind, is it is to be expected. I was going to say as is to be expected, but we wouldn't expect it if you're new to this. In the context of the law against recessions, which is a law calling for full employment at low inflation, a dual mandate of the Fed, the Fed is, at least in practice, effectively required to talk in schmaltzy positive terms whenever they can in order to try to keep confidence going, no matter what, pretty much no matter what is going on, in order to make those goals happen. Okay, so they talked as usual in very schmaltzy positive terms to indicate that yes, we think we can do it, we think we can pull it off, we let inflation go too far. I'll address that in just a moment, briefly, that particular issue, because it ties into what I think is going to happen down the road here pretty soon, in a different way. The reaction of the stock market, because it's still open when they do the news conference. Okay, the reaction of the stock market was hooray! Let's celebrate. It absolutely exploded upwards. Okay, up about 1,000 points from in the Dow from the low. Okay, and pretty much closed at those highs. So I thought to myself, well, let's see how long it'll take this time around for reality to set back in again. It didn't take long at all. Even I was surprised by how quickly it happened. The very next morning, it started already. They couldn't even hold that gain into the next morning. The market opened way lower already. It kept going down. And by the end of the day, it had more than completely retraced that entire gain from the previous afternoon. And in other words, it had more than wiped it out to the downside. Okay? And then on Friday, during the day, it came down even a lot more. The only thing that saved it on Friday from recording that full loss yet at the end of the day was an end of Friday bounce. Okay, now end of Friday bounces are not unusual at all. They happen well over 50% of the time, okay, even in normal times. And what it results in depends on whether the market is positive to start with, in which case it goes more positive, whether it's negative before that happens, in which case it will often go from negative to positive, or whether it's very negative at that point, in which case it only ends up less negative at the end of the day. That's what happened this past Friday. It was very negative, and they managed to make the end of week number look better by having this end of Friday bounce bring it closer to zero, but they didn't make it all the way. It still closed down, still added to the big loss from Thursday. Okay, now we'll add one more thing quickly that I've seen a lot more of lately in general, where they run it up at the end of the day to try to make the end of day numbers look as good as possible, and then the very next morning it comes right back down again. I've seen that happen several times, except this time around it happened coming out of a Fed meeting. Okay, now once they ran it back up on Friday afternoon, I said to myself, what is Monday going to look like? Given that it actually was a pretty typical end of Friday bounce, except even more forceful than they typically are. It went up faster. Not necessarily a whole lot more, but it went up faster. They got to near the end of the day, and it looks like they pretty much panicked. Okay, not sure of that. It just looked that way. You know, that's the sort of signature I've seen that indicates panic. You can easily see that from the way the market's moving in real time. Okay, and I was looking at it in real time at the time of day I usually do on Friday afternoon, just to see what the flavor will be to close the week out. Okay. And so I said to myself, well, what's Monday going to look like? Well, I had my answer pretty darn soon this morning already. Okay, the bottom line is that the market opened way lower already, went down to a major support level that they've been trying to stay away from for a while already. Okay, bounced up and down above that support level for most of the day, trying really hard to not go below it, but at the end of the day, toward the end of the day, it came back down, then crashed through that support level, and I do mean crashed. It sliced right through it like butter, pretty much straight down. Okay, and then kept right on going into the close. It closed significantly below that support level at the end of the day, so it was another big down day on Wall Street. Okay, and yes, I do expect it to continue. I have been seeing this coming for a long time already. I just didn't know exactly when it would happen. And to my mind, it's very telling that it happened so quickly after a Fed meeting was done, and the Fed even managed to talk the market up again during the time they were talking right after the Fed meeting. Okay, I find it very interesting that this time around the market didn't start dropping within a day or two. Oftentimes in the past, once the Wednesday announcement was made, followed by the press conference, it would take till the beginning of the following week, Monday or Tuesday, to begin to have the market settle down into reality again. Okay, this time around it happened right away the next morning on Thursday. That is not a good sign. Okay, but it does fit into the big picture of what I see going on and what I've been anticipating. Okay, so the bottom line is I expect it to continue, not straight down. Markets rarely do that, go straight up or down for any real length of time. It's very rare for that to happen. I do expect it in the future that it'll go straight, more or less straight down. Okay, but we're not there yet. That's not going to happen right away. But it is a critical time. I expect inflation to continue. I'll briefly talk about that in just a moment in a bigger picture. I did do a video on inflation already to help clarify some of the details. You can look at that if you want, but I'll briefly describe part of it here too in the context of what's going on right now, since the Fed chairman explicitly talked about it at the Fed meeting and raised interest rates in response to that, in the context of that. Okay, but the point is that overall is that I do expect inflation to continue for the time being. That'll cause more problems along with the other things that are going on, and so slowly but surely the problems will pile up, and it'll become more and more difficult as time goes on to operate within the conventional system and for the conventional system to operate. I am actually looking at alternatives to that. I've been looking at that for a while already, and we'll see how far that can go and how quickly it can come together. And all of it is, at least in terms of YouTube channel and so forth, is really just getting started in the big picture for me. Okay, for multiple different reasons. Okay, the big picture is that there is a long-term process going on that ultimately goes over decades. Okay, several decades. extended this time even more by the efforts of the Fed to keep things going. Okay? The problem is that that is not indefinitely maintainable, and we're getting close to the end of the process. Here's the ultimate bottom line in that regard, which, as far as I can tell, based on what I'm seeing lately and especially recently, we're hitting the critical time for it. We're coming into the critical circumstance for it, which is the law says maintain full employment at low inflation forever. That's what the economists want to see. Okay? The average person does too. Okay, but that's not how reality works. I will address that briefly in just a moment. Okay? The problem is that if you think about it at a very basic level for not that even long a period of time, okay, it's just that economists don't really, PhD economists don't really think at a very basic level. You do that for long enough, a really long period of time, which is what they have been doing. Okay, they've been doing it, working on it, doing it for decades already. Full employment at low inflation eventually becomes a contradiction in terms. Okay? Why? Because if you think about the detail level dynamics of how that works, how those things fit together, just a little bit, okay, you will eventually have to come to realize that in the long run, to keep full employment going, you have to do one thing, and to keep low inflation going, you have to do the exact opposite thing. Okay? So ultimately, unless you get really fortunate and are very successfully careful, you can't end up doing both at the same time in the long run. Okay? And I've heard comments, seen comments already lately to the effect that in the current circumstances, the Fed is going to have to walk a very fine line to get it right. I agree, they would have to do that. The problem is that the Fed consists of humans too, and humans make mistakes. Okay? And the Fed has already made a big mistake recently. They've even admitted as much after the fact, even at the Fed meeting itself here, in the news, also in the news conference, in that their primary objective is still to maintain full employment. Okay? Well, as I think pretty much everyone knows in the meantime, full employment took a big hit during the big illness situation the last couple of years. So the Fed pushed like crazy to get that going again, kept Fed interest rates low for a long time to deal with that, okay, and was repeatedly asked during the Fed meetings along the way by the reporters, when are you going to start changing the interest rate? And the answer was always the same. We are going to keep interest rates low until we are at full employment again, and we know for sure, pretty much for sure, we can keep it that way. That's exactly what they did. The problem is they waited so long to assess that they had reached that point that they kept interest rates too low for too long, okay, and let inflation get out of control in the process. Okay, they're openly admitting as much in the meantime that inflation has gotten, in fact, he said in this last week's meeting, way too high. His words, not mine. Okay, and so the bottom line is they didn't pay attention to their low inflation mandate in the process. Okay, they already made a big mistake trying to make sure they would get back to and maintain full employment that they, in fact, didn't manage to maintain the balance between the two. And my claim is that they will probably make a mistake in the future again too, so we will not end up with full employment at low inflation. If I have time here at the end, I will quickly add one more comment to that too, in regard to what I think the most likely ultimate result, end result will be, which will not be high inflation, to be clear. But I want to quickly address one other thing first. Okay? I want to address the beginning of the overall process so you understand the context for what I'm saying here, because of how critical the moment we're in is right now and overall these days in the big picture. Okay? The focus of economists is simply to get to full employment at low inflation and then stay there. In other words, they focused on what they want to have happen. They do not use the scientific principle of how the real world actually works to come to the conclusion about what they should be doing in that regard. They use it for some of their analysis at the detail level, but not at the basic level. Okay? The reality of how the economics really works, how the real world really works in terms of economics. In other words, how economics works in the real world is that is cyclical, the real world is, and so is economics, and it is a process, okay? The process has been building for decades. I learned a long time ago already what the process really is. The information came to me. I did not go looking for it, okay? And, you know, I'm not expressing super smarts or super intelligence or anything like that here in the process of talking about it. It's just that I sensed once I got out of college, having studied economics in college, although it was not my major, which was probably my salvation. My major was actually a technical one, which is probably part of the reason why I recognized this other thing later, okay? Other information came to me afterwards. And over the course of time, I recognized the validity of it because part of what I was seeing in the real world afterwards didn't match up at the detail level with what I had been taught to expect in college, okay? And so I began to question things, then this other information came to me. I looked at it for a while and began to realize, oh, there's something to this, and ultimately studied it in great detail and began to realize this stuff is the real stuff. This stuff is the real thing. It's the real world. And I ultimately came to realize also why they teach what they teach in college. Okay, but my channel is about the real world, how this works in the real world, you know. That's the reason why the channel is called the way it is, why it is named the way it is, you know. Ultimately, we're dealing with the real world, not what some theory that has been come up with by somebody says it should work. And we are in the current environment truly dealing with how the world really works in reality. That's why I'm doing these videos. Okay, bottom line is it's a process. The process was well defined by people who came before me, okay, and it is playing itself out. I've been able to follow it closely and accurately during that entire time. It continues to develop in recent times. It continues to develop in current times, and all I can say in the big picture is, given the way the process is defined, even at the detail level, we are close to the end of the process in the big picture, okay? We're near the end game, not necessarily exactly tomorrow or the next day relative to when this video is being filmed, but we're close to the end, okay? It's part of the reason I'm doing the channel, okay? To try to help people see it, warn people about it, and maybe even help people coordinate about, working with each other, working together to try to make things work out better for themselves relative to the way things are going to be going down the road in the conventional society. In other words, work on cooperation to help things be more positive and become more positive than they otherwise might be, at least for some people. We'll see how that goes. At any rate, bottom line is that it is impossible to maintain full employment, low inflation, ultra long term. This is a very long-term process, but it's been going on for so long already that we are now in the long term. Okay? We are toward the tail end of the process. That's why we're seeing what we're seeing right now. Okay? Now, one other quick thought in that regard, okay, that'll explain both what's going on right now, at least in part. I know there's a few other things going on at the detail level that are exacerbating the situation or emphasizing it, making it more extreme, okay? But the basic thing that is going on is, I think, the following, and it's going to lead to something else down the road, which we'll be able to see firsthand if it happens. And I will comment on it when the time comes if it does happen, okay? Which is that, how, since they've been pumping money into the system in ever more dramatic amounts, ever increasing amounts, for a good long time already, how have they managed to avoid overall inflation so far until recently? You would have thought inflation would have taken off like crazy along the way, given what they were doing. There's a very simple and specific reason why it didn't work out that way, okay? It's because if there's one thing all central banks of the first world very well know in the meantime, it's how to avoid true hyperinflation. That's why the mandate is there for low inflation, okay? True hyperinflation. True hyperinflation will only happen if you flood the economy with cash. Typically in the past that's happened because of money coming off of a printing press, which by definition is cash, and just pumping ever more money and ever more money and ever more money and ever more money into the system in an effort to keep what's going on afloat. Ultimately it doesn't work, you end up with a hyperinflation and the system crashes. Happens every time. Not recently in the modern first world, because they're specifically trying to avoid that. Specifically and explicitly so. How do they do it? By putting almost all of the new money into the system as borrowed money, as loans. Okay? Because it continually has to be paid back, it does not fully accumulate in the system. On top of that, by starting the process during the overall second half of the big picture cycle that I'm talking about, which I won't go into detail here, I'm going to do another video on the details of that. Okay? Haven't gotten around to that yet. The bottom line is if one does it during the second half of the cycle, most of the money is going to go into the financial markets anyway. I will say in that context, there's no way the stock market could have even gotten as high as it did by the end of the 90s without all that money pumping going on and going into the stock market. At the beginning of the 90s, there wasn't even enough money in the system yet to be able to pump it as high as it went by the end of the 90s to make it go that high. Okay, but they have continued to pump money into the system since, and the bigger problem, the bigger picture is pumping the system up like that to make the stock market go that high, because the overall system is cyclical, as people are finding out the hard way in the meantime once again. Maintaining such a high stock market in the long run is not possible. It is not doable. And here's at least one of the mechanisms by which that will happen, by which that will transpire. It's an extension of what I just said, okay? Because what ends up happening is the economy loses steam over the course of time in real terms, okay? So the only way to keep it going is pump more money into the system. That's what they've been doing. That's why the economy is held up. Ever more drastic measures, ever more extreme measures by the Fed along the way over the years to make it happen. They themselves have been calling the measures they used to get things going again after 2008 emergency measures that they would get rid of once they could. The thing is, they never actually did so along the way. The emergency measures stayed in place the whole time since then. Okay? But that's how they got it going. The point is that to avoid hyperinflation, they did it all this borrowed money. Almost, I should say almost all this borrowed money. Okay? They made sure they didn't pump enough cash into the system to generate massive inflation. Until the big illness came along. Then they had to go into hyperdrive, overdrive with regard to emergency measures on steroids. In other words, they put even more measures on top of the emergency measures they already had in place that they never managed to get rid of. Okay? And in the process of that, in the course of that, they pumped so much money, borrowed money, but such a sheer amount of money into the system to get things going again as quickly as possible, that the sheer amount of money they pumped in, even though it was borrowed money, generated more inflation than they wanted it to. Okay, it's not a hyperinflation. Hyperinflation is way higher than what the United States is experiencing so far. Okay, but it is definitely not low inflation. Okay. The problem with this in the long run is, since the very reason why they're having to do so over the course of time is that the economy as a whole on a real basis is losing dynamism and will continue to do so. That's why our monthly deficits are often still in the hundreds of billions of dollars to keep things going, when those used to be annual deficits years ago. It's part of the reason for the other thing I'll quickly mention at the end yet that will play a role in here too, that's also slowly but surely coming to a head as an ancillary to that. Okay, but first the inflation.